Good afternoon. My name is Marvin Clark, and I'm the Southeast Segment Head for Diverse Businesses based here in Washington, D.C. My team and I are intentionally focused on helping veteran-owned companies grow and scale, and we look forward to being here today and being a co-sponsor with, presenting sponsor with NVSBC. We have a great panel today made up of great experts in the industry. Our MVA team, Military and Veteran Affairs team, works very hard to host events and co-host events with NVSBC. And we're very proud of the activity we do and the work we do with veterans to help support them and their families as we help them succeed financially and through growing their businesses. So today I have a group of panel experts I'd like to bring to you today to talk about access to capital and understanding the differentiations between what a traditional bank does versus a non-traditional lender does. I ask that it'd be interactive, that we look for opportunities to ask questions. It's all about building relationships. Erica Dobbs spoke to that earlier. Erica and I go way back a couple of years, and it's all about building that relationship and asking those hard questions that you may not want to ask and building that relationship along the way. So today I have three great experts. I have Phil, I have Denise, and I have Steve, and they're each going to introduce themselves and tell you about their role and responsibilities within JPMorgan and Republic. So Phil, start with you.
Yeah, thank you, Martin. Appreciate it. It's good to be here. If nothing else, I'd tell you that last panel with Erica, Dawn, and Sharon was worth the price of admission for me. At any rate, just pretty amazing stuff. So Phil Poliquin, I am the market executive for the Aerospace, Defense, and Government Services team at JPMorgan. We cover middle market government contractors throughout the U.S. Really, those companies with annual revenues derived from federal contracts. At least 51% of their annual revenues is how we sort of characterize it. Anywhere between 20 million and 500 million annual revenues. Got 7 years of experience in banking, focused on government contractors specifically. Prior to that, I did a few years consulting work in the oil and gas industry, did some projects for ConocoPhillips, LyondellBasell, and BP refinery south of Chicago, and that was my first step out of the military. I spent 24 years in the Navy, really an embarrassment of riches with my Navy career. Got to fly A-6 Intruders, F-18 Hornets, Baby Hornets, and Super Hornets. Commanded a Super Hornet squadron, came out here and worked at the NRO for 4 years, and then retired out of the Hampton Roads area in 2013, working on some unmanned aircraft system strategy. So look forward to chatting about our capabilities in the middle market, and really, several of these panels have talked about the continuum of access to capital and where at different times is appropriate to tap into those, and look forward to talking more about where my middle market group fits.
Thank you, Phil. Well, my background isn't as nearly as interesting as Phil's, flying airplanes and being a pilot, but my name is Denise Tolu. I'm a business banking area manager, executive director for JPMorgan Chase. I've been with the firm now for 3 years. I've been in banking now for 26 years, and I was, when we were having lunch, I was speaking at my table saying I started for the lollipops. So here I am now, but I have an extensive amount of experience in government contracting, lending in the business banking sector, and really looking forward to our conversation today on how we may be able to help provide you with more information, more education in that sector as well. And one of the comments that came from the previous panel was being able to develop a relationship with your financial institution, which is one of the most important things that we are looking to accomplish as well. So again, thank you very much for having us, and I'll go ahead and transition it over to Steve.
Thanks, Denise. Appreciate that. I want to thank NVSBC for hosting this great event, and for JPMorgan, your guys' tremendous support of the veterans in our community. You guys have really stepped up your support with sponsoring this event. Republic Capital Access, we provide working capital. We were founded in 2009. We process about $1 billion in receivables annually, and we work alongside banks. We try not to compete with what they do. And a lot of times when they aren't able to provide the liquidity that you need to grow your business, we can step in and be a partner and a resource for you. Prior to joining Republic in 2023, I owned a specialty finance company, and I'd been in finance for about 20 years before that. I'll hand it back to you, Marvin.
Great, thanks. Great panel. I'm looking forward to a great discussion. The one topic that always top of my mind is what differentiates a traditional bank, JPMorgan Chase, from a Republic Capital Access? And where do you find areas of collaboration? And what does that look like? Anyone can take that question.
Yeah, I can certainly start out. I've go back with RCA 7 years and that relationship, and you know, I've obviously made a lot of discovery in 7 years, starting fresh in banking. Admittedly, I came into this role 7 years ago with a lot of naivete, and I assumed that, you know, perhaps there would be a template. You know, a government contractor, they're doing some work in support of a government contract. Let's just dust off a template as a bank, and we'll be able to fill in the blanks and provide you know, a set of you know, working capital or growth capital, as the case may be, or even treasury solutions. Obviously that's not the case, and every situation is bespoke. There's unique you know, customer sets. There's obviously a quantitative approach to doing underwriting on debt, specifically on credit facilities. But then there's also a qualitative piece of that assessment, and looking at the leadership team and types of contracts that they're on, all the things that we've talked about already. In a lot of cases, a company has not reached the stage, as you know, several of the panels have discussed already, to approach a banking solution, and in those cases, I certainly default to my DNA on trying to figure out a solution. You know, how can we help this particular company or this situation? And RCA in particular provides a complementary service in really supporting the growth, the starting of the journey. I'll just characterize it as that, and you know, we'll make a referral back and forth. That level of support that RCA can provide, a company will outgrow the need for that at some point, and so the you know, the referral goes kind of back and forth over a period of time. So I'll turn it over to.
Yeah, you know, it was interesting listening to the earlier panel. There were some not so nice things said about the banks earlier, and I feel like I need to kind of step in and kind of defend you guys a little bit. The biggest difference between my company and a bank is simply regulation. And as I explained to my 5-year-old almost on a daily basis now, rules are put in place to keep us safe. The money that goes into a bank is everybody's money. That's where my grandparents' money is. It's where my money goes. It really shouldn't be put out to risk. And it's like a seatbelt in a car, right? As dangerous things happen in the economy and in the market or in a car industry, they make new safety measures to prevent terrible things from happening. So the nature of banking is going to continue to get more and more complex and difficult to obtain capital because they're trying to keep people safe. My company, we operate in what we would call the alternative space, which is equivalent to the Wild Wild West. There aren't a whole lot of rules, and you can run into some dangerous situations rather quickly if you don't know who you're working with. And I think that, you know, the biggest difference there just being they are held to a very high standard for their lending. And what makes Republic unique is that we don't need to underwrite the credit worthiness of the company that is applying for our facility. We're underwriting the credit worthiness of the account debtor. And in the government space, that's oftentimes the federal government, which, you know, to this date, they have always paid their bills. When they pay their bills is a different story. So we are underwriting the creditworthiness of your account debtor. So it could either be the federal government or, you know, a large contractor. And I would say that it is a difference on which contractor you're subbing for. You know, the creditworthiness of Jimmy's IT company is not quite the same as Lockheed Martin's, and that's something that we take into account.
Okay. So there is true collaboration between the two.
Absolutely.
Absolutely.
So if we drill even a little bit further down and we look at internally within the firm, JPMorgan Chase, you have different verticals and different lines of business. Denise, can you talk about what business banking, what you do in your daily, everyday world versus what Phil would do in the commercial bank, because I think that makes a difference. If you don't understand the structure of a bank, then you may be talking to the wrong person at that institution. So build that relationship now so you know which direction to go in so that you have the correct and proper resources. So Denise.
Absolutely. Thank you, Marvin. That's a fantastic question. So the business banking segment, we're really focused on the companies from 1 to 20 million in annual revenues. And myself and Phil's team, we work very closely together because we want to ensure that we're working with the companies, and as their revenue size grows, we're able to make the appropriate introductions into Phil's worlds as well. And the collaboration component is key internally, and we work very hard to make sure that we preserve that to ensure that the client has the best experience. And going back to also Steve's comment with Republic Capital Access, we collaborate with alternative lenders as well. We want to make sure that we're graduating clients from alternative lending when they have historic cash flows that we can use for underwriting into conventional underwriting as well. So, it's a constant line of open communication throughout the firm to ensure that we're providing the appropriate advice to our clients.
Great. Going a little bit further and just talking about we talked about the different aspects of types of lenders within the institution, but when should a company come to you and say, hey, I need funds to support my operations? Should it be at the beginning? Should it be at the end? Should it be at the middle? Should it be when they need it or when they don't need it? So just a perspective on that.
Can I take that?
Yeah, absolutely.
The company should come to us in the beginning. Okay. Because this way we can help, advise, and talk about different alternatives they can use for funding and access to capital, and different sources of access to capital that may not impact them significantly personally. You saw a lot of the stories in the previous panel that a lot of the individuals used home equity lines of credit and credit cards, which impact your personal credit substantially when you're trying to gain access in that fashion. We have resources because we have experience in this industry that we can not only provide you with information and education, but we can refer you to other alternative lenders as well, such as Republic Capital Access, and that's where the collaboration comes into place. So that advice starts when the company is in the inception phase. It really does, because we want to make sure that you're starting out on the right foot.
Steve, I would love your insight.
Yeah, I mean, we always say we want to walk across the finish line at our company. We don't want to run across it. The more time you have, the more options you have. And the less time you have, the worse your options are going to be and more expensive they're going to be. So, talking to your banker on a regular basis about what you're planning on doing for the company in the future, if you're deciding that you want to go after a large contract that's well beyond what you guys have done in the past, it's important to let your banker know so that they can prepare for that and potentially introduce you to other sources of capital if they can't provide it. I think it's, early and often is kind of the answer for how you should, communicate with your banker.
Right.
Yeah, I think to foot stomp a point made in the previous panel before our break, it's really a relationship. The most important element of this is it is a relationship that you need to develop with your banker, and rather than seeing it as a service that's provided by him or her. The banker is more of an extension of your company into the bank rather than the other way around. I mean, ultimately, Denise and the bankers that work on my team are JPMorgan employees, but they would agree with that point that they see themselves as extensions of their client into the bank to help guide them, coming up with some solutions that maybe they hadn't thought of at that point. You could certainly treat that relationship as as a commodity and that sort of thing, but I don't think that does either party any good ultimately. So the ADG team at JPMorgan in particular was purpose built to establish those relationships as early as we possibly can, and perhaps it's not a lending relationship right out of the gate. Perhaps RCA is providing that solution. But establishing that relationship so that we get to know the company gets to know us, and it's with the business banking group, and we're set up to where we can smoothly transition that relationship from business banking to the middle market, and then into our corporate bank if appropriate, or get an introduction to our investment bank so that you can get some, when the time comes, get some thoughts on valuation, that was talked about in the previous panel as well. A little bit. So all those connective links are in place at JPMorgan to make sure that we're best equipped to support companies throughout the entire business lifecycle.
Great. And for those who don't know, ADG is Aerospace, Defense, and Government Services.
Yep.
Throw that out there. Thank you for that. And it goes back to relationships matter. And please feel free to ask questions. Just raise your hand and I'll call upon you, because it's a great opportunity to have a direct conversation with a banker that's on the panel. If you could look at different types of funding that's available for each of you. Just a high-level overview of what's available, what opportunities that you see out there, how we look, and I'll just throw this as an additional, how JPMorgan Chase looks at certain contracts, or can we take that as a receivable versus what Steve and his organization can take. And Steve, you can start, or
do you want to?
Sure. Yeah. In the government contracting space, I think that we kind of break it into two types of companies. One that's providing products to the government, and the other one that's providing services. And so when we're dealing with a company that's selling products, we would probably introduce another partner into that equation for purchase order financing. It's another one of these subsets of folks where if you reach out to your bank for a working line of credit and they say, no, maybe you should talk to Republic, we can't do something, we introduce you to another company that we think is great. There's inventory financing, there's floor financing. I mean, there's a type of financing for just about anything that your company has going on. It's just making sure that we connect the right dots to put the right team in place for what your situation is. Our product is blindingly simple. If you have an invoice, then you have an asset, and you can sell that asset at a loss to us and receive the cash immediately. That provides you the working capital that you need to accelerate your business cycle and spin those margins a little faster.
Okay, great. Sense.
Yeah, so it's the whole suite of potential of credit facilities, really broken down into three buckets. Going back to the products versus services, primarily the companies that we deal with are service providers. That's a lot easier. Product, we have to dive a little bit into, is it a part of a program of record and all those kinds of things that it talked about earlier. The challenges of the acquisition cycle and some potential changes that opportunity to change that approach that's on the government. But generally speaking, EBITDA is the entry point in our analysis for underwriting, and from 1 to high single digits. Ideally, there's a look at the amount of assets you want to, whatever credit facility is in place, you want to make sure that there's capacity to cover whatever outstandings. A little bit more challenging to have a term loan put in place, but revolving line of credit is probably the answer for that first bucket. From 8-ish to 15 million, that opens up the aperture a little bit. Potential term loan that can be put in place, that would typically be amortized to a point where we could accept a little bit being outside of assets for a short period of time, but the goal is to amortize that to get it within assets in a relatively short period of time, within 18 months or something like that. 15 and above, that opens up the whole gamut of availability for term loans and working lines of capital, and provide some growth capital as well.
And in the business banking space, we provide working capital lines of credit for the government contractors. We're looking at a financial package of at least 3 years of financials, personal financial statement. backlog, work in progress report. We'd like to see a waterfall analysis of maturities of contracts, a diversity in your contract backlog to ensure that there's future cash flows. If you are within the 8A program, and if you're about to graduate from the 8A program, we like to be able to see that you have self-sourced contracts within, along with the 8A contracts that you may have. So that diversity does play a significant role in how we look at the underwriting process. But it's very similar to what Phil's team does, but his team is going to be providing more asset-based lending than the business banking segment may. So we're primarily looking at all the cash flow and previous cash flow of the company to ensure that they can support the credit facility.
So you each briefly touched on this, but when we look at types of loan, a term loan versus a line of credit, can you just give a high-level overview of when would you do a term loan versus when would I do a line of credit? You touched on it, but I just want to just reiterate that if I could. Anyone can answer that.
I guess a term loan, when you have permanent working capital at some point in time, you would have to convert some or finance a portion of your working capital line of credit into term financing, and have the availability there for future contracts and future needs for the additional remaining portion of the working capital line of credit.
Yeah, I think this is actually often an overlooked area. We sometimes we work with companies that range from billion-dollar companies to I just started my company last week. So we see a wide variety of folks. And I think that one of the things that we've seen people do when they misstep running their business is they mismatch their financial tool with their asset class. So what does that mean? That means that if you get a term loan, it should probably be for something like a piece of equipment or a property. If you're going to be using a term loan to fund a new contract, this is the situation where I think that you can get really in trouble. If you lose that contract, it's not like the term loan goes away and there's no asset to sell to kind of cover that term loan. So one of the things we always try to coach to folks that are new is to always match your financial instrument with your asset class, and you can avoid putting yourself in a really bad situation. Some of those types of term loans require personal guarantees, so you're not just putting your business at risk, you're putting your personal assets on the line. So I think that what we're talking about here is sometimes kind of just skirted over a little bit, but it's really important to take a good look at every type of piece of capital that you introduce to your company and know what it's designed for.
Great, that's a great answer. Phil?
But yeah, in terms of personal guarantees, that's not something my group in particular would do. Like Denise said, we focus on cash flows, and that's the basis. I don't know that there's any deal that would require a personal guarantee. The other opportunity to put a term loan in place is growing through acquisition. So that's typically where we see that term loan component.
Great. Another question, and like I said, if there's any questions in the audience, please let me know. Yes, ma'am.
Sure. Yeah, so if you're an established company, we'd love to see recently generated financials, P&L, balance sheet, an AR aging report. But with a brand new company, we need a copy of the contract and your articles of incorporation, and you've got a line of credit or something that would function similar to that. We have two products at Republic. One is an accounts receivable financing where we accelerate the cash flows of your invoice. And the second one is called an earned and unbilled facility. So that facility would allow you to start a new service contract on March 1st and make that first payroll on the 15th using the timesheets that you're submitting for the earned income. So one of the things that Republic offers to newer companies is the confidence to kind of go after these bigger contracts and know that you have somebody there that can help you make that payroll. and grow your business regardless of the size of the contract. The other thing that we can provide too to newer companies is a letter of financial capability that can accompany your bid, stating that you have access to capital should you win this bid. And that's something that checks the box for the contracting officer, puts them at ease, that knows if they award this contract to you, that you'll be able to finance it. And sorry, go ahead. Did you have anything? Okay. And further to that, if you have that letter, you can actually defend against a protest. We had a company that I talked to recently delivering oxygen tanks to the VA, and they won their bid, and then it was protested on financial capability, and they lost the contract because they couldn't prove that they had the means to finance the contract.
Great. So you've spoken about a win. So Denise and Phil, could you talk about a win that you had recently, or you've seen over the past 6 to 8 months on your teams, and then what that looked like?
Well, one of the wins involves a referral to RCA. So I got introduced to a company in Chicago. Typically does $5 million in annual revenues, a lot of training and security work. Found themselves having won an IDIQ doing some work for CBP. Some of those task orders could provide them $250 million annually, and so they were concerned about how they were even going to, think about attacking that. And it came to us requesting a line of credit, and obviously that wasn't something that we could do. But RCA, was the first stop. Made an introduction to them, and I think they've got the foundations in place where they've shifted from being concerned and dreading even working for those task orders to actually looking forward to making that materialize.
Great.
So, yeah.
Denise?
And in the business banking space, we actually had one client that was winning a new contract. It was the company's revenues were approximately $6 million in revenues and had been in business for about 8 years, had graduated from 8A probably about 3 years ago, so had a very nice past performance, and was winning a contract had just won a contract with the FDIC, and was preparing to obtain a credit facility to be able to support any type of staffing needs they may have to be able to support that contract. And, they had a strong waterfall analysis. They had a strong diversification in contracts. And obviously with the past performance of strong cash flow, we were able to provide a $1.5 million credit facility.
Nice.
That's great. I'll share one that we sent back to you guys. This company was banking, and I won't mention it by name, but it was the dark blue government credit union. They're a fantastic bank for individuals, but when it comes to the episodic nature of government contracting, you really need to have a banker that understands government contracting. It's somebody that's going to be an ally for you to grow the business. This individual went to that bank, and he'd been banking there for 15 years. He tried to get a line of credit, and they told him no several times. So what did he do? He wanted to grow the business, so he got MCA loans, or merchant cash advances. And that is, an extremely expensive way to grow your company. He didn't get one time. He got one 6 times.
Wow.
He had 6 MCA loans and was spending $290,000 a year in interest. So we had to pull a lot of strings to kind of wipe out that debt, but we pulled in some partners of ours that helped provide some bridge financing, introduced him to Will Napper at JPMorgan, and Will Napper's recently introduced him to an outsourced CFO who's got him on the right path now. And we're ending up saving him, I think, close to $140,000 in interest.
Yeah, thank you for bringing that up, Steve, because the conversation starts when you get the declination from a conventional bank, because they can give you the step-by-step process on how to be able to obtain conventional financing. So if you have received a declination from a conventional bank, go back to them and say, what do I need to do differently? What steps do I need to take to be able to obtain conventional financing? And they will help you. Right. And again, this was mentioned in the panel before. what ends up happening, they get a declination, and then the business client doesn't want to re-engage with that bank again due to that declination. But it's quite the opposite as what they should be doing, is engaging with them and understanding what steps needs to be taken at that point.
That's a great point. I was a commercial banker for 20 years before I took the role I currently have at JPMorgan Chase. And my strategy was always, how do I help that client get to yes? I may not be able to get you a yes today, but how can I help transition you to get to that yes? Whether it's through resources, whether it's connections that I have, or just educating you on the process of how to improve your cash flow and which contracts to go after. So that is extremely important. Yes, sir.
The question I have, Marvin, for Steve.
Mm-hmm.
Thank you for doing this presentation too. When this, I'm also, by the way, from JPMorgan.
Okay.
So the client comes to us when they almost ready to win the contract or they have the contract, and they kind of like late in the game. When they come to us, at that point, we looking for resources for them, how we can provide them access to capital. They are not qualified candidate for us. What should we do?
That's a great question. Obviously, call me right away. But I think to your point, and I love that question, that's great. I think there's 3 scenarios where we get introduced from banks, and banks are our number 1 referral source. So before I kind of answer that question, I will just say, if you are shopping for a banker, I was once told that if you're shopping for a surgeon, you should talk to the anesthesiologist there. They're the ones that work alongside the surgeon. They're the ones that see the outcomes. We're kind of like the anesthesiologist in this room. We get to work with a lot of the companies that work with bankers, and we see the outcomes, and we know which ones do well and which ones don't. So if you're shopping for a banker, I'm happy to make referrals out to you there. Back to your original question, I think there's really 3 scenarios where we get introduced from bankers, and the first one is the one you just mentioned. You know, they walk into the BANK because that's where you go to get money, right? It turns out that they're heavily regulated and they can't give that money to you because you don't have the work history, or you don't have the financial documents to warrant that. That's where we get introduced, and we'd encourage them to keep their treasury with a GovCon specific bank so that they can kind of keep an eye on the company. So and then when they're ready, success for my company looks like is actually you saying goodbye to me and going to JPMorgan or another bank and getting a lower cost of capital. The second scenario is a great scenario. This is one where we talked about timing earlier. Let's say you just won a huge contract that is 3 times the size of what you've done in the past, and you go to the bank and you didn't tell them that this was happening. And my favorite quote for this one is, an ounce of prevention saves a pound of cure. Benjamin Franklin was spot on with that one. In this scenario, if you talk to your banker early enough on, they'll be able to help work around that. But what happens a lot of times is you surprise win it, you didn't think you were going to win it, and all of a sudden you've won, oh gosh, I have this big contract, how do I finance this thing? That's usually when we get a call from a bank saying, we need someone to help provide some short-term capital for these folks until we can get them into our line. And the third one's not such a great story, but it happens quite a bit in GovCon, especially with graduating ADAs. Regardless of how much you prepare for that graduation, it is extremely likely that you're going to have a revenue decline. When you have a revenue decline, and maybe you took a large distribution that year, well, the alarm bells are going to be going off over at JPMorgan and every other bank, and they're going to say, Steve, I need you to politely take care of this one for me because they don't quite fit into our parameters anymore. So those are really the 3 scenarios that we get introduced from banks. And then of course we, talk to anybody that's, in the GovCon space, and happy to answer any questions or make any referrals. Yes.
How about commercial clients?
So the secret to our low cost of capital is the fact that we are underwriting the federal government or a large government contractor. The risk on that is extremely low. The number of contracts or the number of invoices that haven't been paid is extremely small for our company. That means that we can offer very competitive rates, slightly higher than what a bank would offer. If we went into that commercial side, I think I read some white paper that said about 10% of commercial invoices never get paid. So commercial factoring is a great deal more expensive. we do one thing, and that is all we do, and we do it very well. So that helps us kind of stay on the straight and narrow. We do not do commercial.
One final example of a win that really speaks to the support to the entire business lifecycle is J&J Worldwide. I don't know if that rings a bell to anyone here, but recently sold that company to CBRE. That relationship goes back years, well before I joined the firm. It was an existing client that our investment bank sold to private equity. We continue to support through its life cycle with private equity, got the sell side mandate, and recently sold it for that private equity firm to a strategic at a, and this is all public, at a valuation that was very impressive, especially for a company that's doing janitorial services. So that's sort of the panacea, I think, establishing those relationships early on, long-term relationships, support the growth through an entire business life cycle, ultimately finding a win for everybody involved, the owners and all players. And that goes to the our investment bank is completely integrated into the aerospace, defense, and government services team. So we continue that from business banking all through the investment bank as well. We have our own dedicated investment banking team that supports government contractors.
And it's not only the credit facilities and the lending that we provide a whole slew of solutions to be able to help a client.
Yep.
So, when you look at the holistic approach of what JPMorgan Chase and other banking institutions can offer, we are working with our clients to be able to provide the company with internal working capital as well. So providing those cash flow solutions, providing those fraud mitigation solutions to be able to protect their banking relationship is also very, very important to us. So it's not just the credit facility, but we're going to take a holistic approach and provide a solution and a holistic solution and the entire cash flow needs of that government contractor.
So just
another tool, if I could, that hasn't been mentioned is a digital matchmaking platform called Capital Connect that JPMorgan has, and I haven't heard that discussed of late. So those companies that are looking to raise Series A through D funds greater than $15 million, we have a digital platform called Capital Connect that really finds a suitable partner, whether it's VC or private equity, for those companies seeking to raise capital in that way.
So that leans in on the question I was going to ask.
Oh, sorry.
No, you're great. You're great. Thinking ahead is what solutions as a government. I'm putting myself over here on this side of the table now. As a government contractor, what solutions can a bank or financial institution provide to help me win more contracts? That was one. Are there any other examples that are out there?
To help you win more contracts.
Oh, yeah, to help you win more contracts.
In the business banking space, I can't say we have a solution to help you win more contracts. Right. However, we have a variety of resources in our repertoire to be able to help provide you with the right resources to get you in the right position. We have the minority entrepreneur segment that could also be of service. They were talking about Erica Dobbs. She mentioned Hans Petit Home from the previous panel. So we do have those services to be able to help the small business owner improve their company operations, create efficiencies, and improve cash flow. So we do offer those solutions as well outside of the regular slew of solutions that we offer.
I think improving cash flows allows you to strengthen your company, build that strong cash reserve so you can go out and win more business and be able to support those contractors winning. So that's another avenue to support and provide services back.
And it's the advice we provide.
Exactly.
Yeah, to your point there, I think we've gotten so caught up with the cost of capital in the last couple of years. I mean, with interest rates rising so much, but I think it's really important to have access to capital, and that's what this symposium is all about. If you're going to grow your business and your margins are healthy, you're going to need working capital at some point. And I think people get kind of caught up on the cost of things. It's quite a sticker shock for the last couple of years. And then back to your point about what other services, I think that you guys aren't giving yourselves enough credit. If your banker is a GovCon banker or has a team and specialists that work in GovCon, as you guys know that are in the space, I mean, it's a fishbowl. I mean, we see a lot of the same people. We know which folks can help you out with whatever need that you have. And that comes back to that like monthly or quarterly meeting that you're going to have with your banker, and keeping it relational and keeping it conversational and talking about what needs you have coming up. And if there's an exit plan, I'm sure JPMorgan probably knows some fine attorneys, and they have an incredible network of folks that are experts in their field for something that they don't necessarily do. And likewise with my company, if we are going to give everybody we talk to everything we have. If we can't do it, we will do our best to introduce you to somebody we think is an expert that can help you. And we'll follow up on that. We want to make sure that everybody we touch is taken care of.
Right. And I think just for us being here today with NVSBC is a way we're giving back to support that. We do at JPMorgan Chase have thought leadership sessions. I know we're having a GovCon Symposium shortly. We're bringing industry experts to talk about what we can do to help you grow and scale and give you access to information and resources you may not have had, and may put you in a room with another contractor or a government official that can get you the contractors you've been looking for, just haven't had that conversation yet. So the goal is, how can we continue to build those relationships, provide collaboration among the various institutions that are on the stage, and help you grow and scale at the same time.
No, I agree. I think those two areas in particular, leveraging a network. So in chatting with your banker and talking through challenges and that type of thing is going to expose some networking opportunities, and that person will be able to introduce you to somebody who can help out. And then the second one is just relieving some of those stressors and tensions that are associated with just operating on a day-to-day basis, so that you can divert your efforts toward growing organically, getting new contracts and that type of thing.
And we're very intentional on how we manage our relationships. Our business banking model is set on a business banking model that is all of our bankers have a very small portfolio, and we're very intentional with our portfolio. Every one of our clients, we will have a quarterly meeting to ensure that we understand past, present, and future needs, and a holistic annual review. So it's a hands-on relationship model and management style that we have. Although we're the largest bank from an asset size in the United States, we really try to bring that local bank feeling into the marketplace, and each managed client has a dedicated business relationship manager to understand the advice and solutions that we can offer that client. Because we want to make sure, just like Steve mentioned earlier, we want to make sure that we understand the future needs of the company, so we're aligning the financial support that company needs. There are times when we even pull in during the renewal phase of credit facilities. We'll pull in one of Phil's bankers to provide us with support and ensure that we're supporting that company in the revenue growth, and we're supporting that company as they're winning more contracts, and pivoting them to the right segment of the bank as well. So, that active relationship model that we have at Chase really provides our clients with the experience, with that white glove experience that we want them to have.
Great responses. Again, I reach back out to the audience. Any questions? And this is the time to ask a banker questions you never wanted to ask, but this is burning at me, and I have to get it out. Why didn't you give me a loan last week, Marvin? Well, I can't talk specifically, but we can figure it out. But if there are no questions, then my other question would be, what are some challenges that you've seen recently in the past, maybe your former careers, your former institutions you may have worked at, where clients and prospects have come to you and said, I want a line of credit to support my operations, but I don't know how to do it. So I guess I'm looking for what are one or two challenges that you see that you've been approached with, where you've like, if you'd have come to me earlier, then we probably could have fixed it. But right now, let's work through it. If that question makes sense.
One example that pops out at me, I don't want to get into specifics, but it was a contract that was deteriorating due to our withdrawal from Afghanistan.
Mm-hmm.
And the individual had reached a little bit too far initially, counting on that work continuing. wasn't prepared for the the impacts of that that particular declining a contract. So so that was a bit of a challenge to work through. But again, based on the relationship, we were able to solve those issues and come to a mutually agreeable solution.
Okay.
Yeah.
All right. Denise or Steve?
Yeah, in the business banking space, since the revenue size is significantly smaller, we're focusing on that $1 to $20 million annual revenue size, and the personal guarantee is something very important to us in my space. So at times, we see business owners that have really relied on their personal credit and have exhausted all resources on personal credit, which may have impacted their personal credit scores.
Right.
And that's why I say, before a business starts going down that path and really exhausting their personal credit resources, speak to someone.
Right.
Because one of the key things that it's either JPMorgan Chase or any other conventional bank is looking at in the business banking space, especially because it's a very closely held company, is personal credit. So we want to make sure that we're preserving that personal credit in the application process.
Just to touch real quickly on the personal guarantee, why is that so important? Because a lot of times I would hear from clients or prospects, you have my business assets, my business is making money. Every year I'm making X amount in net profit and net income. So why do you want my personal guarantee?
Because
if you have my business.
You're the one writing the check.
Okay.
At the end of the day.
Okay. You're
the one writing the check. It's a closely held company, and we want to ensure that we have the buy-in of the owner as well.
Okay, great. Thank you. Steve, you have any insight?
Yeah, one of the things that we find challenging, and I don't know how many people are going after these types of things, but SBIR contracts is something that we've spent a little bit of time lately discussing. For those of you that aren't familiar, these are contracts that are set up with milestone payments that sometimes can be 6 months out. And it's very difficult to obtain financing for a milestone payment that's maybe going to happen in 6 months. So it's something that my team internally has been working on, and we're trying to find solutions. But one of the things we've been recommending to government contractors that are going after those types of things is to reach out to their contracting officer and ask for different terms where you're getting a receivable moment on a monthly basis. So those are the kinds of things that we spend time thinking about is if we can't help somebody, good grief, there's going to be a problem for them finding financing just about anywhere. So that's one of the things that we've done recently. And then I think another interesting one that I was involved with recently was a company trying to obtain an Israeli defense company, and the banks couldn't do it because it was a foreign entity. That was a fun exercise for me. We haven't closed on that one yet, but I've learned an awful lot, and that's one of the most fun things about working at Republic is I often find myself the dumbest person in the room and learning a great deal.
Okay. So how would you perfect, I mean, it's made off the range. How would you perfect the lien on a foreign receivable?
Well, we'd have to partner up with some junior debt and then use our accounts receivable financing to mitigate some of the risk of that debt being paid back.
Okay.
That was our solution there. Okay. And it's really kind of the best of a bunch of bad ideas at that point, but that's what we came up with.
All right. Any questions from the audience? Yes, sir.
You can't hear you virtually. The virtual audience can't hear your question. Hi. At the risk of sounding really naive, I just had a quick question. You mentioned leveraging your network and then the learning curve. I'm going through a learning curve right now, and so I want to know if you have relationships, and what do they look like with funding consultants, or as the SEC would call them, finders, and if that's a thing in your circles.
So you said funding consultants?
Correct.
I don't know if I'm familiar with that term. Has anybody else heard of that?
I haven't heard that, no.
Right. I don't like using the term broker, so I didn't. But yes, correct.
Okay.
I think that's a better way of explaining it.
Okay. So you're dealing with like a startup situation?
Several. So several contracting startups that are looking for funding, and because I do business development for them already, they came to me. So
yeah, I mean, we can talk about the different options. I mean, that's more of like a startup question. I know this is more about a growth and stability thing, but I can jump in there. And if you guys have anything to add,
What's the magnitude of the capital raise?
5 to 10 million.
5 to 10, okay. Yeah, the reason I asked, I wondered if it fit within our Capital Connect platform, but that's.
I was kind of thinking that also.
Yeah.
I just wanted to ask to see what.
Yeah.
We can start with your most expensive form of capital, right? And that would be equity. You can always give up equity on something like that, but if the company turns into a $100 million company, you've just paid an extraordinarily high price for your startup. I mean, at that level, I don't know how many people have personal assets of $5 to $10 million. So it might be difficult to obtain that from like a home equity line of credit or friends and family, which can often make Thanksgiving quite uncomfortable. But yeah, I mean, that's a unique situation. And you're dealing with several companies that they have no revenue and they're looking for 5 million?
They do. When I say startup, it's like 2 years, but they have revenue, past performance.
There are a handful of private equity firms that are in the business of making minority investments, and $10 million, I think, is their preferred check size at the smallest level. I don't know if that's an option as well. But again, you're losing equity, you're giving up equity. I don't know whether that's an option for you or not.
Got it.
And depending on the dollar amount, they're looking for SBA Express lines of credit as well.
Good to know. Thanks.
All right. And we can get you still connected to Capital Connect. So reach out to me and I'll make sure that at least you can have that conversation.
Yeah, definitely.
Okay. Are there any? Okay. Yes, sir.
I just had a quick question in all the asset classes that banks are involved in. Obviously, the elephant in the room is commercial real estate. And in my discussion with a lot of banks, the C&I lenders have all said things are getting tightened. They're tightening up in anticipation. So is that kind of how you guys see the world, where you have sort of a credit team that's looking at very large, real estate needs to be refinanced, higher levels, and impacting appetite around C&I?
There is a commercial real estate team. I haven't worked with them, and I don't have a great depth of knowledge on what they do. I will say that I haven't, in any of the deals that we've worked, it hasn't been a part of the structure or collateral.
Credit, right? We want to do less because we got too much here.
In the business banking space, if it's owner-occupied real estate, we'll still continue financing that. We still have a very healthy appetite for that. Right. If it's investment real estate, our LTVs may not be where they were in the past. So I know there has been a decline of approximately 40% in commercial office space in the valuation. So a lot of the values of these properties have declined. However, again, if they are owner occupied, we still have the same appetite that we had before.
Right. But I do think your assessment is correct and on point. I will say that what I've seen in my role is that I'm getting lots of referrals for larger transactions, for larger commercial real estates that are investment properties. And I'm able, because we partner with so many institutions, I'm able to reach out to those partners and say, here's a transaction I'd like to discuss with you. And then if they have an appetite, we'll make that introduction. So it goes back to relationships and collaboration. If we can't do it from a JPMorgan Chase perspective, then what partner do we work with internally that we can have those high level conversations with, and then reach back out to both you as well as the partner to say, hey, here's an opportunity. Would you like to meet to discuss?
Because JPMorgan Chase has a tremendous amount of verticals. I'm learning about every vertical every day. Right,
exactly. There are a tremendous amount. If we were to leave the audience with nuggets, what are 1 or 2 nuggets that you could tell them about access to capital and when they're approaching a bank? And we know relationships, you can drive that home, but relationships are extremely important. I can't express that enough. I always talk, and when I'm talking to colleagues and clients and prospects, is I had a client who started with me 15 to 20 years ago as a small janitorial services company, has grown from a 500 revenue size to over 75 million today. And all along that process, it's been a pendulum of us having conversations about access to capital. and what he should do to get that next contract. And it's been a partnership, I like to say. So the goal for us is to, how can we as a bank be a great partner to you and you be a great partner to us? Because at the end of the day, it does come down to relationships. But I'd love to hear from each of you some nuggets about going forward and building that relationship with the bank, and some things that you see there in the market where you think there's value in continuing to have those conversations and build those relationships.
Well, that's certainly the key, foot stomping the importance of relationship with whomever you develop a banking relationship. Make sure that they understand and have the capability of understanding the work that you do, so that they can provide you the value that you deserve and need. We're talking here about steady state and growth capital specifically, but the other nugget I'll say is understand where you are on that growth trajectory and what type of capital is realistically available to you at that particular stage in your growth, so that you're not, getting frustrated or overreaching or, seeking something that really isn't in the art of the possible.
Mm-hmm.
Again, I know we are in growth capital. However, my comment is going to be, come to us early on. Come to us early on. Tell us your story now, and we can get you, if we're not able to help you today, we can put the resources and support you with what you need so we can help you in the future. So please come to us early on.
Have you guys ever turned down a cup of coffee from a client?
Never.
Yeah. If you guys have questions, reach out, use your banker, use your network to answer some of the questions you have. I think it's important to remember that if you fail to plan, you are planning to fail when it comes to your capital access. You need to start early. You're going to need it at some point. You're going to need different pieces of capital throughout the lifespan of your company. And sometimes you'll have multiple pieces of capital working at the same time. But having a plan in place, it gives you not only the confidence to go forward with conviction, but to make sure that you can execute on what you're trying to accomplish.
Mm-hmm.
The other offer I'll throw out is, I'm 11 years out of, 10 and a half years out of retirement, and I found my transition challenging, mainly because I wanted to make a pivot into something completely different. So please use me as a ready resource if you have contacts of folks who are, in a similar position, getting ready to retire or transition out of the military. I'm happy to be a resource and referral source to chat with those individuals and provide my perspective.
Great. Any final questions from the audience? Comments, recommendations? Great. Well, we want to thank you for being here with us today. I hope you've gained some knowledge and some nuggets that can help you grow and scale your company and continue to enjoy the remaining part of the conference. And if we can do anything to support you as a company or organization, please don't hesitate to reach out. I'm always available. My colleagues as well are always available to help you grow and scale, because our goal is to make sure you're successful. Have a great day.
Thank you.